Welcome to another episode of Trends and Ideas. I'm your host, Brian Egley. For years, electric utility stocks have largely served as trustworthy investments that pay high-yield dividends. Lately, the group's run into some selling pressure. Joining me to discuss what's behind it and what this means for investors is S&P Capital IQ equity analyst Justin McCann. Thanks for being here.
Good to be here, Brian.
Justin, what are some of the trends that we're seeing in the electric utility industry these days?
Well, as you just mentioned, there's been a significant sell-off of electric utility stocks, and this has basically been due to the investor concerns regarding the sustainability of a low interest rate environment. Interest rates are important for electric utilities not only because of the large amount of debt they have to issue, but also because of the relative value of their dividend yields.
What are some other issues facing the industry right now?
Well, back in June, President Obama announced his climate action plan, in which he's directing the EPA to come out with even more strict regulations regarding carbon dioxide emissions, which has had a negative impact on utilities with, coal-fired power plants that haven't been really upgraded. There's also the question regarding the aftermath of Hurricane Sandy and how utilities can respond to future storms.
You mentioned Sandy. What are utilities doing to strengthen their power grids against potential future superstorms?
Well, they've already begun and have made proposals for the redesigning of underground networks because of their sensitivity to the corrosion caused by saltwater flooding. They've been moving critical facilities to higher elevations. And would be a major project would be in those areas which have, been historically vulnerable to floods and superstorms, moving overhead power lines to the underground.
All right. Well, now, based on what we've just been talking about, do you have a specific stock recommendation you could share with us today?
Well, we think Con Edison is attractive at the moment. The stock is down almost 12% as of this morning. The yield has increased from 3.8% to 4.4%. And the company has, regarding, the aftermath of Hurricane Sandy, proposed a 4-year, $1 billion capital investment program, which is aimed at, strengthening its infrastructure. And this would be, if approved by the regulators, add to their rate base from which future rates would be authorized.
Okay, thank you, Justin. For more of Justin's stock picks and views on the electric utility industry, we encourage our MarketScope.com subscribers to read a related Trends and Ideas story on MarketScope Advisor. It's called Putting the Spotlight on Electric Utilities. Until next time, thanks for watching or listening. I'm Brian Egley for S&P Capital IQ.